Hello everyone, I'm Neha Vashisht from ET Markets. Welcome to ET Markets IPO Talk, where we discuss the latest IPOs in town. Today we are going to discuss the SBFC Finance IPO, and for that we are here with the management of SBFC Finance Limited. We have Mr. Aseem Dhru, MD and CEO, and Mahesh Dayani, co-founder and CBO. Thank you to both of you for joining us on ET Markets live stream.
Thank you. Thank you, Neha.
Okay, so to start with, SBFC Finance has a presence across 120 cities in India. Can you tell us about the company and what are your expansion plans?
So, when to build SPFC, the challenge we have taken is that normally when you want to build a good business, you find a tough problem to solve at scale, and then solve that problem. So we have been attempting to solve this problem of reaching out to small businesses in small towns of India, and where banks over the years have found it difficult to crack that problem. We are going in where, in a sense, where the sun hasn't yet reached. We have taken a little dia and trying to reach those places. So the attempt is that we would want to get into small towns of India all across. And generally, we have seen that
Okay.
people have tried to do MSME finance by regional approaches. Nobody has done it at a national level, and we want to hopefully position SBFC as a lender of choice that small businesses can reach out to. And eventually, we right now we are present in 25% district in 16 states where we are present in, and eventually we will penetrate deeper into all the districts in these 16 states, and then we will expand beyond these states as well. So there's a lot of work to do. Where we have now 6 years into operations. We are at a good place in terms of where we have reached, but we are super
All
excited
right.
about where we are headed.
All right. So can you also take us through the financial performance of SBFC in the last few years?
So if you really look at our journey, over the last 5 to 6 years, uh, we've last year we've ended at almost 5,000 odd crores. We've been growing at a compounded rate of more than 40%, which effectively means that we're doubling every 2 years. But that's also coming off
Hmm.
from a lower base. And the last 4 to 5 years, we've spent a substantial amount of time in building distribution across these 16 states. So if you look at a lot of players in this particular segment, you would see them focused more on 4 or 5 states. But
Yeah.
to build it across 16 states and that too nationally does take its time. So if you look at our performance over the years, growth has been pretty impressive. And growth is not so much of a challenge in this segment. The market's almost close to 8.5 lakh crores. That's growing at almost 16, 17%, which translate to the market doubling in 4 years. The category
Hmm.
of segment where we belong is 2.5 lakh crores that's secured 5 to 30 lakhs in ticket sizes. Our average ticket size is close to around 10 lakhs. And we've been growing both in terms of disbursals, both in terms of disbursals per branch, because unit economics is equally important. So we ended
Yeah.
last year with a AUM of 5,000 crores, profits of 150 crores, and a return of equity of 12%.
Okay. So, coming to the sector, SBFC is into non-banking finance sector. So, I want to know how is the consumer demand right now, and what is the overall outlook for the sector?
So if you look at the entire construct for MSMEs and the total market size, and we'll just restrict the market size to a secured, because if you really look
Hmm.
at unsecured, then the market obviously is substantially larger. Uh,
Yeah.
IFC report tells you that probably the credit demand is close to around 80 lakh crores, moving towards 100 lakhs. It's been fed to the extent of 22 lakhs. Unmet demand is 80 odd lakhs. These are very, very large numbers, right? But rather than
Yeah.
getting into that particular space, we said that let's look at what the actual numbers are from the Bureau, which tells you that the total market size is 8 lakh crores. And in our space, the number that we're talking is 2.5 lakh, which is doubling every 3 years. So effectively,
Hmm.
in 2025 and 28, you're staring at a market which is going to be 5 lakh and 10 lakh crores. And that's a large market. That's one.
Yeah.
Second, thanks to UPI, you can cite a lot of transactions A lot of unorganized is moving into organized. A lot of borrowers that we deal with are borrowing, for the first time. So clearly we're moving a lot of unorganized borrowers, to an organized segment. That's been our contribution, and that's what we're aspiring for. So if you look at the growth trajectory that's, lying ahead of us, I guess we have a
Hmm.
fabulous run ahead, given that the growth opportunity that's coming through. And you really don't have too many sectors or segments which are actually growing or give you a potential to grow or probably double in 3 to 4 years. So I guess we are in a fantastic Goldilocks scenario, as one calls it, in
Yeah.
terms of a high runway ahead of us.
All right. So I just also want to understand what are your expectations from this particular sector that we call non-banking finance?
So, see what one is attempting to do is that ultimately NBFCs are coolies of credit, and we
Hmm.
borrow wholesale credit from banks, and then we take it to small businesses and distribute these credit out in a way in which we can get the money back as well. So
Yeah.
the attempt is that we have the next 5-10 years of work left in front of us to keep doing what we are doing. The attempt is that eventually we should be a material player and a player of choice for small businesses every time they think of a loan, because India has almost 64 million small businesses across the country, of which only about 8%
Yeah.
get any form of organized finance. So there is a lot of work to be done here, and we are an economy in transition. So we are moving from a informal to a more formalized economy. We are an economy that
Yeah.
is moving from a non-tax to a more tax-paying economy. So as the economy transits, and transactions move more digital, we see that there is going to be a bigger opportunity for us to serve.
Definitely. And I also want to understand what do you think about the peers in the industry? What about competition?
Oh, we have. I mean, we learn all the time from from the players that have already preceded us and are doing some excellent work. This is in the business of finance. Competition is not really so much at the level of the customer. Competition is more in
Hmm.
terms of performances and what you're able to deliver at the end of the quarter and the end of the year. Uh, the business of finance, everybody does the same thing, but somewhere doesn't get the same result, because the real
Yeah.
the real challenge you have is of execution, and that is not that's more internal in terms of your own ability to manage the growth, to raise funds at the right cost, to have the right operating cost, and to have the right credit cost.
Hmm.
We watch competition, from a point of learning all the good things that they are doing and improving our game over time. But it's not a one-on-one game. It's not a zero-sum game. Here you will have multiple winners, and there will be an opportunity to learn from what others are doing as well.
So before we conclude our session for today, I want to know that what is SBFC planning when it comes to the IPO?
Uh, so we're raising close to around 1,025 crores, out of which primary is 600 crores. The balance is secondary. The primary
Okay.
raise is largely to augment the growth capital in the company. So if you look at companies who are in the early stages, you would
Hmm.
have a higher equity base. So our current capital adequacy is close to 31, that moves to 41 post issue. But that's been raised largely to support the growth trajectory that the company has been delivering. And also,
Right.
to be fair, that during a life cycle of a company, the leverage comes into at a much later stage. You can't expect the bankers to take an equity risk for a debt return. So the company
Hmm.
is going to be heavily capitalized at an early stage, and subsequent to delivering and consistency in performance, the leverage part comes in subsequently. So a lot of the capital that comes in is going to be towards the growth capital of the company.